Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about low volatility strategies, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
So when I put on my trade this morning, the decisions that I made were, first of all, I just want to get a general feel for the market. My general feel is that we're in this low volatility time and things are going to be painful. The next thing is to have a directional bias, and the directional bias has been up. I don't think anybody can argue that. I'm sure that there are a lot of you that want to pick the top and will tell me that it's just too overbought. We can't continue this, therefore I'm going to go short. Or you'll have some other technical reason why, and you'll probably be wrong. Going with the trend is just a far easier thing to do. First of all, it takes all the pressure off, takes away the decision-making process. And that's a good thing. You think, why would you want to take your decision-making process away? Because you think that you know something and you don't. And so you're going to make bad decisions by thinking that you're right. So we're getting a little bit of a breakout. Let's see if we can get up to this LVL. I would expect that we'll have some kind of resistance coming up to this, but if we can break through, that'd be a good thing. So I have my directional bias all set, bullish. I had my width all set, volatility super low, therefore narrow, between 10, 15, 20. I had to go 10 today. I have my overall size that I need based on my own tolerance and capacity for risk. And my risk to reward, which is a standard, going to be 10% of the width or less. So I have all the components for the trade, 10 wide, low risk to reward, that's 10% or less of the width. Put it on, I'm good. Now, when I first put it on, it was at like 90 cents and it looked like things were falling. So I thought, oh, okay, maybe I can get it cheaper. So I put it on for 60 cents and it never went down there, hit it for a while, then went back up. And I said, okay, I'll just let it go and see what happens. And then about 40 minutes later, it came back down and hit it and filled and then went back up again. That's what happened. So I initially put it on like right around here, and it came down, it tickled my price and then went straight up and then came back down again and then filled. That's typically how I fill. I don't want to overpay, or I would much rather pay less than pay more. That's my philosophy. I'd much rather pay less than pay more. And I'd rather not be in the trade than pay more. So I want to pay less and I'll stay out of the trade if I don't get to pay less. And I feel that way even more so during times like this, during low volatility times that are just inherent with greater risk. That's my attitude. Does that mean that I won't make as much money? No, it doesn't necessarily mean that. It just means that a little bit tighter on my entry criteria. And that seems to work out. I trade a little bit less, but it seems that I also make a little bit more and my losses are much smaller.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.